All right, so despite signs that the inflation rate may be easing, forecasters are still expecting high interest rates to push U.S. economy into a recession this year.
Yeah, in a poll for the Wall Street Journal, economists put the probability of a recession in the next 12 months at 61%. That was a little bit higher just a little bit ago. In October, it was 63%. They still think it's very likely to happen. The question is how rough it's really going to be.
Yeah, and the stock market's already been in for a rough ride. Poor performance over the past year. That's added fuel to the talk of recession. And if a recession does come, it could end up being called a so-called Recession, a recession that impacts America's wealthiest the most.
Oh, I have not heard Recession before.
They're pushing that term, apparently. Is that an economic term? I guess so.
Not really.
Yeah.
It's new economics.
It's a headline writer's job.
You know
right
what?
there.
We're going to talk to Harriet Torry. She's an economics reporter for the Wall Street Journal, one of the authors of an article about the economic outlook for a recession. Thanks for joining us. Obviously, inflation has been easing. There's a lot of economic indicators that look positive over the last several months. The Fed is hoping for a soft landing in terms of a recession. How are economists feeling about that? And what's really going on in terms of the labor market, inflation, and the Fed's rising interest rates?
Well, from what we can tell from the survey, economists are a hard pass on a soft landing. They really don't see this as particularly likely. We had 3/4 of economists in the survey answering no to the question, will the Fed achieve a soft landing? And I think what's going on here is that economists feel that the Fed is just still really behind the curve. They were too slow to react to inflation when it started to rise in 2021. That made them, prompted them to raise rates really aggressively in 2022. And they still have work to do. Economists welcome the fact that we are seeing some inflation easing in the headline rate. In December, inflation was 6.5%. That was a lot lower than the 9.1% that we saw back in June, but it's still very, very high, especially given the fact that the Fed's target is 2% year-over-year inflation. And they think that what is causing this is the very strong labor market, and the labor market remains very strong. We saw in December that the unemployment rate was 3.5%. That's, close to that's a 50-year low.
Right.
So it's really seems to be just, they're worried that the Fed has a lot more catching up to do, and that they're going to have to keep rates higher for longer, and that eventually this is going to cool demand and prompt employers to start cutting jobs and cause a recession, unfortunately.
Harriet, one of the more strained news phrases I've heard in recent years is this one, rich session, recession, rich session. I got all kinds of issues with it. What is it?
I mean, that is not a phrase that I'm familiar with either. But I think one thing that speaks in favor of a shallow and mild recession this time around is that labor is extremely hard to come by still. We've seen this very sharp increase in interest rates over the past year, but the labor market remains strong. Companies still need workers. You still see hiring signs everywhere. So I think the expectation is that if a recession does come, businesses will do all they can to hold on to workers, because workers are just in extremely short supply. And the factors that are keeping a lot of people out of the labor force, like early retirements, less immigration due to COVID and for other reasons, they don't show signs of, switching anytime soon or changing anytime soon. So businesses are cognizant of that. And so some economists say that if a recession comes, businesses will try hard to hold on to workers. And that potentially means, obviously there will be job losses in a recession, but perhaps not as extreme and egregious as we saw in the last two recessions that we had, one in 2020 and, of course, the financial crisis in 2007.
Right. Balancing that strong labor market is certainly something that the Fed's looking to and potentially could lead to that soft landing. I'm seeing here that in your Wall Street Journal survey, your economists are predicting that employers will start cutting jobs in the second quarter. Tell us what industries are expected to be impacted more, and are these expected to be more of the middle income, high-paying jobs, minimum wage?
Well, those are not questions that we really go into in the survey. We just ask for payrolls generally across the board. I mean, when we see recessions, the businesses that we tend to see hit are, cyclical ones, discretionary spending. There's often very large drops in jobs, for instance, in the services sector, restaurant workers, people have less money, or they feel like that they feel nervous about a recession. So they stop traveling, they stop going out to eat, things like that. Maybe they, cut back on things like services like haircuts. So those industries can often be hit pretty hard in a recession. But yeah, it's definitely the case that our survey did expect businesses to start cutting jobs in the second quarter. And that's also when they expect, growth to turn negative. And I think what economists are saying is that this all relates to Fed interest rate rises. They expect that demand is going to start to cool. One thing that's been very strong over the past year is consumer spending. I think stronger than expected. People had a big buffer from stimulus checks. Obviously, the labor market has been very strong. And once the economy reopened after COVID, people really did want to go out and spend. They wanted to take those vacations, have those restaurant meals that they couldn't do during COVID. But we've definitely seen that these stimulus funds and these savings have started to run down. And so there is an expectation that consumers will pull back and that will, of course, have an impact on growth.
Yeah, they have been making that prediction, though, for a while. And still, it seems like people are continuing even to go into debt in order to continue some of that more discretionary funding. All right.
That is very true. Yeah.
Yeah. All right. Harriet Torry, appreciate it. Thanks.
Thank you.
Thank